Hello and welcome back. My name is Brandon Watson. Today in this video, I'll be going a little more in depth into a ticker that I called out in my last video. Now I'll be going over who they are as a company, the charts, and if you stick around to the very end, I'll even be going over my price targets and where I think they might ultimately end up at in the end. The Chemours Company, going under the ticker symbol CC, provides performance chemicals throughout the world to various industries including automotive, energy, and consumer electronics. Operating in 4 segments, the first of which CC specializes in is titanium technologies. Through their TI Pure and Baymax brands, CC provides TiO2 pigment for delivering whiteness, brightness, opacity, and protection in various applications to several industries, all the way from architectural to packaging to even footwear. Through different coating applications, TI Pure's aim is to enhance and strengthen whatever it's applied to in order to withstand many environmental and human challenges that cause products to contaminate or degrade. The Chemours' second segment, Thermal and Specialized Solutions, offers refrigerants to help maintain food, medicine, and other perishables. They offer propellants for personal care products such as hairspray, shaving creams, and deodorants, as well as suppressants for the military that help combat things such as fires. CC doesn't stop there though. They also offer Teflon to the military as well as other industries which help to sustain chemical and thermal resistance to its applications, including increasing reliability performance to aerospace, semiconductors, pharmaceutical, and biotech manufacturing. Looking to store large amounts of hydrogen as clean energy starts to ramp up? The Chemours Nafion membranes help fuel cells maintain higher outputs through environmentally sustainable production. Then, moving to the third segment, CC is taking on the automobile industry and helping supply advanced materials that will not only help make cars lighter, but also perform better and become more sustainable over the long run. Products such as their Viton fluoroelastomers perform great in extreme environments, which help things such as powertrains and engines that are getting smaller in order to reduce fuel consumption. Though, with these smaller engines and powertrains come higher temperatures that they must operate under. If the temperature gets too extreme though, items like turbocharger hoses, seals, gaskets, and O-rings can get damaged or blow out entirely, which is what CC aims to reduce. And if none of that was enough, under the Chemours' fourth and final segment, CC offers industrial chemicals used in gold production such as sodium cyanide, high-performance lubricants and coatings for industrial applications, as well as fluoroelastomers for consumer electronics which help products to withstand sweat, lotion, and moisture, among other things. So as you can see, the Chemours Company has quite the range of products that range in various needs from various industries, the biggest of which being military applications, longevity for consumer products and clean energy, as well as the future of car design. Just as recent as a week and a half ago on May 20th, the Chemours was given a buy rating from Bank of America Securities with a price target of $42. Earlier in the month on May 6th, Argus also upgraded them from a previous hold to a buy rating with a price target of $40. If I had to take a guess, I would say that their earnings beat on May 3rd was a potential reason for these upgrades, as they posted 71 cents a share compared to Zacks' estimates of 68 cents a share, which would represent a 4.41% surprise. The quarter prior, Zacks expected 36 cents a share, when CC then came out and posted a 61 cents per share earnings, which was a 69% difference. So either Zacks is off base here, or CC has been delivering better than expected results for the last 4 quarters. I'll leave that for the fundamentalists to decide. In other news, this month also saw the Chemours Company achieved a memorandum of understanding with the Beijing National Aquatic Center, Beijing National Indoor Stadium, and Wukesan Sports Center for the use of Opteon, which helped reduce global warming production by 65% at the 3 ice rinks compared to previous games. The agreement supports the adoption of more sustainable solutions for the ice rink venues to help reduce the overall carbon footprint. The same product is also used in partnership with the NHL since 2018 and will help as the 2022 Olympic Winter Games start to ramp up. Moving on to the technicals, CC's average volume sits at 1.45 million, while the relative volume is fairly low at 0.58. If you've seen any of my past videos, you'll know that I prefer the average volume to be over 1, but I'll let this slide as we'll talk about it in a bit. Beta sits at 2.12, which is good because CC's price should move more so compared to the overall market, which could give us a faster reward. We're here to make money, not watch paint dry, and a beta of 2.12 should help out with that. Now, going into the charts, we'll start first by taking a look at where we are at in the trend, which compared to last week's video, we were about to test this $35 resistance. On Wednesday the 26th, price finally succeeds in pushing through $35 and closing the day out at the highs. The following days are met with lower volume as price holds over 35, which is why I say I'm going to let the average volume for Friday slide. The factor for last week was the amount of volume that came in the day previous. If we take a look at the 30-minute chart, we'll see that right before the close of bell, there were 384,000 shares traded for the day for the last half hour. 30 minutes before that was another 300,000 shares, which altogether totals roughly 36% of the 1.8 million shares traded for the day. At just over 1/3 of the day's volume in the last hour, which as you can see, Ever since then, price hasn't come back and has continued to push higher ever since then. Now, as of Friday, the new resistance is at $36, which if we draw a line here on the 30-minute and then move to the max weekly chart, we can then extend that level all the way out and see again where we are at in the trend. A few things immediately call out to me, which is, number one, price is exactly at a former resistance / support from back in 2017. Number two, price is pushing higher each week while making lower lows as it forms into its $36 resistance. Number three, the EMA lines are sloping up, including the 200 EMA, which is hard to maneuver around, but not impossible. If you take a look back in early 2017, you can see all the EMAs started to curl up along with the 200. Then if you take a look back in early 2019, you can see the 200 slightly start to curl up, but ultimately got dragged back down the ensuing weeks to come. Moving on to number four, though, we can see that price has been moving extremely orderly as it builds up, consolidates, builds up, consolidates, builds up, and consolidates at every level higher. This is nearly perfect as we want the price to be orderly on the way up so that higher price levels can sustain us higher. Do you want a rocket ship to the moon or do you want a rocket to Mars? Well, as of right now, you can't get to Mars without first fueling up at the moon, so taking it easy allows us to get there safely and with our ship loaded to the max. Which brings us to the price targets. Assuming that CC can continue to move higher and sustain itself along the way up without any sort of overextension, where can we ultimately see the Chemours Company head to? Well, the first bridge to cross is going to be at $40, which lines up not just with the upgrades that CC was recently given this month, but also with the resistance that formed here briefly between $40 and $42 back in 2019. Then from there, price will then have to take on the $45 and $50 levels before ever thinking about reaching all-time highs again. One thing to consider is the monthly chart. Now that May is over, we can see that May saw slightly higher volume compared to the month previous. The good news is that price closed near its highs. The bad news is that price went up 20% last month and is closing near a resistance. When looking to buy, I prefer to buy near supports, which according to the monthly chart, CC is nowhere near. Though if you remember looking at the daily chart, you'll see that $35 was the resistance and now could potentially be the support. I played this a bit last week as I was in and out of photographing houses across Texas and managed to make roughly 3% out of the 7% push for the week. All of my positions were for roughly $10,000 and I managed to make an easy $300 out of it, and as of right now I'm holding only 90 shares worth just over $3,000 at 36.04. Now I might fairly be high up there, but my goal is to lock in profits rather than risk anything while I was at work. So let me know what you think about CC. Just how high do you think the Chemours Company can go? And if so, will you be adding it to your watch list for the coming weeks? I plan to ride in and out of this until I know for almost certain that price isn't going to come back to the $35, $36 level. What about you? Drop a comment below. I love everyone's feedback and I hope you all have a great week.